Once the initial data entry has been completed, advisors can move on to using strategic financial planning to engage clients during the presentation. This video will cover one of the more popular scenarios that advisors will run for their client's financial plan, which includes investing in a future property purchase or selling their current property to fund expenses in retirement. To start, we'll review our client's name in the client list. Here, we can use the Plans tab on the far right to add a specific proposal within the client's plan. Here, we can model a future property purchase, as well as a future relocation. When we open the client plan, we'll be able to structure those specific proposals and organize them within the retirement analysis area. To model a future investment property purchase, simply visit the Profile Goals area. Advisors can use the Add Goal drop-down menu to input a specific property goal. In this case, we'll model a future investment property purchase. The data card will open to show relevant details associated with the purchase. We can indicate the purchase price for $300,000. We can also indicate the monthly rent that's expected to come from this property. We can also include the calendar year when this will occur, any annual appreciation, rent increase, as well as outflows like monthly maintenance, vacancy rates, as well as insurance and property tax. Any annual depreciation can be listed. The rest of the data card will address the specific terms of payment for this property. If there is 100% cash down payment, we can list 100% within the down payment area. If we are going to be taking out a mortgage to pay for this property, we can list the down payment amount, then the relative term and interest rate associated with the loan. RightCapital will automatically calculate the payments needed for this loan. We can also select an early payoff of that loan or a year of sale for the home. Once I hit save, this will be implemented within the current plan. Since I'll be isolating this investment property purchase to a proposed future plan, we can change the calendar year outside of the planning horizon, therefore removing the impact of this investment property on the current plan. I can then move into the retirement analysis area to implement this particular rental property purchase within the future investment property plan. Within the action items at the bottom of the screen, I can address the purchase year for this specific property. In this case, we'll indicate 2025. Since the action items only affect the plan on the left, we'll be able to see the impact on the probability of success and ending investable assets. Next, we can model a different scenario where the client retires in a tax-free state. To set the stage to retire in a tax-free state, I can use the primary home relocation goal. This will assume the sale of the primary home listed in the Profile Net Worth area. Within the Goals tab, we can use the Add Goal Property Primary Home Relocation. This card will ask for the new resident state, which will apply state taxation from the date listed. The activity can be buying or renting a home in the future. When purchasing a home, we can list the relevant purchase information, annual appreciation, associated insurance and property tax, as well as the down payment information. If this is a downsize, we could list 100% down payment to not show any mortgage terms. If we're spending less on the down payment and adding in a mortgage, we can type in the loan term and the interest rate, and RightCapital will create its own loan payments associated with the amount. If there's an early payoff expected of the mortgage, we can enter it here. If I hit save, this would be implemented within the current plan. Instead, we can change the calendar year to be outside of the planning horizon, thus removing its impact from the current plan. Then, within the retirement analysis area, we can change the date to specify this particular primary home relocation occurring only within the proposed plan to the left. Here at the action items at the bottom of the screen, we can change the relocation year from a calendar year to Chandler's retirement. Once we hit refresh on the bottom left, we can see the impact of the Retire in Florida plan on the ending investable assets and probability of success. We can even compare the two options directly within the retirement analysis probability area. We can track the future property purchases into the future cash flow projections using the Retirement Cash Flows tool. This will allow us to visualize the purchase, debt payments, and reduction in taxes that we can see, for example, in the Retire in Florida plan. Here, as I scroll to retirement, we can see the elimination of the tax payment occurring in 2037. Any surplus cash flows seen from the sale of the primary home will be automatically reinvested into the taxable account. The expenses for the new mortgage can be seen by clicking the Expenses area and looking at the Housing column. This will indicate from 2037 on a new payment occurring with brand new mortgage payments, property tax, and insurance. We can view the future investment property to not only view the expenses associated with the specific purchase, but we can also see the additional other income inflows that will be produced through the rental income from the future rental property. This plan can also be viewed to see the specific expenses that are associated with the new housing costs, as well as the initial down payment within the goals area. For additional information on entering or using future property purchase or relocation goals, please reach out to the advisor support team through the live chat feature on the bottom right side of the screen.